All right, guys, we're about to kick things off in a major way with some technicals for QQQ that we should absolutely be considering. Also, a price target for IWM for the inverse head and shoulders. I'll give an update on that as well to see our progress and where we potentially sit right now in terms of support and resistance. I'm also going to give an update on a BBAI stock as well. I think you guys will enjoy that. And then also touch on a little bit of crypto with Bitcoin and Ethereum. And if you guys want to see what I do in order to take advantage of the different market movements we have, especially in terms of options, come on over to the Discord, links in the description. And if you guys don't know about options but really want to, I have a workshop coming up this Saturday, 2 p.m. There's a limited number of seating available. The course has already started filling up, so make sure you take advantage of that. You can scroll through the different thumbnails here that will tell you about the different offerings, a little bit about who I am. It is a live session, and there's also a Q&A to follow it as well. So it's supposed to take the complete beginner all the way up to the point where they're ready to really start looking at taking that first call option trade or that put option trade. And then the advanced workshops, more advanced workshops will come along where we start talking about using short options instead. We'll also talk about advanced option strategies in a future workshop as well. Couldn't be more excited. Again, that's 2 p.m. Links in the description. Code word LEARN is going to save you a ton on that. Guys, we're going to jump into the charts now. So we'll kick things off with QQQ. And I want to go out to the daily chart on this just to take a peek. So I talked about this rising wedge pattern. We fell out of it, but we popped back into it. So that means we have the bottom trend line on here instead of resistance as support. So we don't have to worry, at least right now, for that being a reversal pattern that's going to send us down in major ways. So far, the information that we got for inflation, perfect. And if you didn't watch my video yesterday, giving an analogy on the markets about being like bulls in a china shop, like little kids being yelled at by their parents, getting afraid, like, ah, and then like the fear goes away and we start running around anyway. So the bulls are still on parade here, and maybe we get yelled at again, but until some sort of actual punishment comes in, we're probably not going to turn around. Now, mind you, in terms of technicals, where could potentially we go from here? If you look up at the top of the screen here, up in this area, is where we have some fairly essential resistances, if you will, 602.75 up to 609.76. And I think that that would be a decent spot. Maybe even that 600 level is probably going to be pretty important to us because it's that nice round 100, hundreds number I should talk about for 600. But the technicals suggest, the Fibonacci extension suggests 602 to 609 is about where we could find that resistance, if not a little bit sooner, around 600. And then maybe that is the thing that leads to that small September slump. But I still think it's still having a wild Q4, still on the heels of that as well. Right now, the market's like, well, hey, no tariff-based inflation. Why don't we just keep on running? And then we'll, whatever the labor market reports are when they come out, JOLTS, non-farm payrolls, unemployment, we'll deal with that mess should that mess ever come along. So be watchful for that end of August, early September time when we will watch for those reports to come out. They're probably the next big ones. And then all eyes on the Fed for that easy monetary policy. So no continued labor market slump, lower inflation, if you will. The market's probably going to still party. And that takes us to IWM, the small caps, because they absolutely love the last inflation report that we got so far that said that tariff-based inflation is not yet rearing its ugly head, at least on a headline basis. And so, while we had a nice strong day, this is the monthly chart that we're looking at right now because I want to show you the massive bull channel that we find ourselves in over time. Above the red is usually where we die, but I don't think that right now is that time to die. I think we could potentially put in a new all-time high. We are probably about, from where we're at right now, let me see, about 4 to 5% away from hitting the inverse head and shoulders that I had mentioned earlier. Let me take down these rays. I'll put up the inverse head and shoulders so that you guys can see that. And the price target suggested by that is 248. And you guys should also see the current bull channel that we were trading and we fell out of it. And now we got rejected or got resisted yesterday. But it looks like today we could be breaking back inside of it, which in the near term can show us close to 240. So 238, 239 is about where my cursor is right now. And that 248.08 is that price target from the inverse head and shoulders that I was talking about, going all the way back to May, and things are coming to fruition with a retest of the neckline in a big way back here on Friday, and then just rocketing off of that and hopefully back into this bull channel where we can bounce around and put in that new all-time high, beating out this most recent all-time high that we got at 243. We'd be up another 2% up above that yet. So the conditions are right now, and the market sentiment is right now that we could actually hit that price target prior to any sort of slump that we might happen to get. So as long as nothing happens to rattle the markets between now and the next few days to next few weeks, we should be in really good shape. Now over to Bitcoin. I've moved this box up here. This is where we were trading in before, and I've moved it up here to show really where that resistance comes in. If we can sit on top of about 123.5, I think it's more like 123.6. If we can sit on top of that, man, the sky's the limit. Maybe then we start that run to this inverse head and shoulders price target of $150, which I think end of 2025, we could absolutely see that come in. And the inverse head and shoulders that I'm talking about is right here on the screen in front of you. So looking at the daily chart, we can see it. And we've already broken out of it. We've retested the neckline on this thing, and now we're starting to move back up. But now we got to get up on top about 123.5 to 123.6. We want to sit on top of that, show that we have support up there. And I can put up the technicals that put that together for you, but I'm telling you, like, it's a real big mess to look at. But you can also see some other clutter that we have. A little bit of a stopping point about around 127, 128, and then another big chunkaroo, if you will, that takes us like we have a whole sort of lot of chop between 130 and 139, almost 140, but then we have about $10,000 of just free rise territory up above 140 up to 150. So for Bitcoin, I'm pretty darn excited about that as well. Ethereum finally making up to this important Fibonacci extension level, about 46.86, and then when we peaked on this thing, well, where we're currently at is at 46.88. So you can see we popped just up above it, all the way up to 47.14, at least as per what's on this chart, and then pulling back a little bit to that one. On an hourly basis, showing a little bit of bearish divergence, we could reject resist a little bit. Now, mind you, pulling back to 43, 44 wouldn't be too bad. We don't need the reset, but it could happen. Then up above that, just north from about 48 up to, looks like, let me see what that next one is, 48.87 is that next area of resistance that we have, which includes the last all-time high that's all the way over here, which during that time, we actually weren't in overbought territory then. It did show us a bit of a drop after that. We'll say, well, maybe that's an understatement. But for Ethereum, we could push higher than where we're at right now, going all the way up to present time here. And we'll take down the technicals and just take a look. We are well above the 5 EMA on this one, above 13, the 21, the 50, you name it. If we put up the simple moving averages, what do we got here? If we were to revert to the mean, that would sit us on this shelf over here and set up that next launching point. We're overbought on a daily basis, so maybe we could use it. Weekly basis, a little bit overbought, and monthly basis, not quite there yet. Now, before we wrap things up, I did want to talk about BigBear.ai stocks, so let me put this up here for you. Yesterday, I talked about the rejection that we got between the 50 EMA and the 50 SMA. The EMA is up here at 616 as of yesterday's close, 603 for the simple moving average. What we want to see is a push up above those. Sitting on top of those is going to be absolutely critical for seeing further upside happen to BBAI stock. The volume was good. The interest in it was good as well in terms of buying it off its lows. And I have further technicals that are on here as well. You can see that we came up to this 609 level also before retracing and coming all the way back down here to this 479 level. And so sitting on top of that's going to be good. We have a little bit of resistance at 629 and then trend line resistance just north of that. That as of this video here, or I should say this next day over 646. So let's just pay attention in the near term to that 50 period moving average. That's going to be the big telltale sign that we have. Now, if we zoom in here to the hourly chart, it's got a bit of a bull pennant type look where we have the tops coming down, the bottoms coming up, and we're trying to squeeze higher on this thing. Pay attention to the volumes. Be careful not to get too in love with this below 609. That could be a pretty hard stop out for us. So we want to watch for that. We want to be able to overtake it, especially because of what I said back here about the 50 EMAs that are on here. 616, as a matter of fact, is the exponential moving average. 603 is the simple moving average that are on there. So got to watch out in those sixes. Got to clear both of those, and we want to sit on top of those as support. 609 be that near-term thing that could show us that. And in terms of the moving averages that are on the hourly chart, as we look at them, we are up above the 20 moving average. We're also up above the 5 and the 13. The 13 is about to cross the 21. So it looks like we might have some further green lights, but we're going to have to watch and see. It might even be possible that this thing rips back up and starts flirting with that $7 mark if it's able to overcome those resistances that are in the way. So it does have the earnings that came out in order to fight it, but this sort of interest that we got yesterday, recovering 20% off its lows, it's actually pretty darn impressive. So we'll see what we get. hopefully we're able to overcome that near-term resistance. I'm in the position to capitalize on some of that. I would like to capitalize on some of those shorter plays that I have as well. But honestly, they're not going to win out over the long positions that I have on bigbear.ai. So it seems as though we are like full steam ahead in terms of risk on. And when we start to get to the feeling like the market's never going to stop going up at that point in time, that's usually about the time that it starts turning around. And usually it aligns pretty well with some of the big technicals that are out there. So I'm going to be looking for that turnaround spot that could happen in the near term, especially as we get near that non-farm payrolls, the jolts, because maybe it just retraces a little bit in anticipation of that people are starting to de-risk a little bit before those major catalysts come along. NVIDIA earnings can also be a major catalyst for us. But we'll see if they take that run up to 5 trillion, which is around 204 or 205 per share for NVIDIA. And that could certainly be something that would mark a near-term market top, especially if NVIDIA reports and then it pulls back pretty sharply on that. And to be like, yeah, things are great. Let's take a little bit off the table, reassess, readjust here, rebalance, especially where hedge funds and institutions are involved, and then replan for that next move higher through the end of 2025. But we'll cross that bridge when we come to it. And like I said, guys, I'm going to be using options throughout this time to build alpha to my portfolio. The Discord is a place where we have thousands of members and a whole team of expert panelists. I'm one of them that are over there. You guys can check it out. Code word doctor, links in the description. If you want to see the transactions that I make, and like I said, it's almost always options that I use. And if you guys want to learn about options, you don't know anything about it, but yeah, I heard a lot about them. People talk a lot about them. I just don't get it. Call, put, buy, sell, contract holder, writer, all that kind of stuff. You name it, all that essential vocabulary and more. Make sure that you check out that workshop this Saturday. Make sure you use code word LEARN so that you get that discount. And I'll also give you this other tip. If you have the WHOP app, WHOP, and you go to sign up for the course through that, Apple's going to charge you a premium in their app store on top of it. So do not use the WHOP app. Instead, just use your web browser and use that link that's down in the description. And you're fine as long as you don't have the WHOP app. By the way, but if you do, they're going to charge a premium on top of it because of what Apple charges them, a 30% fee just by going through an app store based app. So don't do that one. It's going to be far too expensive. Instead, use the code word LEARN with that course. And like I said, for the absolute beginner all the way ready to the point where it's like, okay, well, I'm fairly certain right now that I'm ready to, if I find the right opportunity, buy a call option. I'm fairly certain that I'm ready to buy a put option based on the right circumstances and the right beliefs. And I'm not going to go any deeper into that because if you're a beginner to options, then that's enough for me to say for right now to entice it. And I'll tell you what, they can provide some wild alpha, but there are some risks, that pretty significant risks that go along with it as well. And you should know both of them at workshop. We'll talk about the benefits and the risks. It'll be as exhaustive as possible, along with a Q&A and a community that follows for the next 60 days as well, where you can talk with me and the other people from that session about the ideas that you have, about questions that you have, about other opportunities that are out there. Really is a good time. Guys, I'm going to let you go. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.